You are paying cost of the funds as 12%. Your IRR is 11%. IRR is 11. That means your project will suffer losses. Project will suffer losses does not mean you have already made the calculation. Wealth of shareholders will not increase. And if your IRR is more than 12%, wealth will increase. Wealth maximization will be there. And if IRR is exactly equal to 12%, so neither there will be maximization of wealth nor your wealth will erode. That means in this respect, we can call IRR as break-even rate. In this context, I had explained to you that IRR is a break-even rate. Is this clear, or you need more explanation, or any one of you needs more clarification?
Got it, sir. Thank you.
Okay, okay. Anything else? Any further question? Okay. So I had explained to you the meaning and relevance of tables, under which condition which table should be used, and what are the features of table. If you read the table, in which direction the data calculated is there, so you should know how to calculate it. The compound interest you would have certainly known in your earlier classes, and for the present value also, the calculation must have been told to you. Let me repeat that you will not be required to make these calculations in the examination. A table or the relevant values will be provided to you. At the same time, we should at least know the process through which those tables are being created. For example, in the table, 1%, 2%, 3% rates are given. And suppose you need to calculate something wherein rate is 12.75. Unless you know how to calculate manually or even through system, you cannot. Therefore, you should know how to calculate using computer and how to calculate using it manually. Once this part is over, let us move on to what is next in your syllabus. Approximation of IRR I had explained to you. Capital budgeting in practice. Okay. People have been conducting researches. There are news items, there are papers, there are research papers and articles wherein the scholars have empirically tested which of these methods would be popular in the industry. Do you have any guess which will be the most popular method? Assume that you have some surplus money and you wish to invest. Which method will you use for appraisal of different options which are available with you?
So net present value.
Sorry?
Net present value.
Which makes, see, I have already discussed with you 4 methods. So you need to answer, I will use this method for the appraisal of investment options that I have at hand. Which one? So this is where the application of these concepts come in. Why should you waste your or spend your 2 years in MBA? There are certain things, you study them and you apply them in real life. A concept, merely knowing it is not enough unless you know what is its application in our life. How do we apply it? I have asked you a simple question. Which one will you? This is what the meaning of capital budgeting in practice is. That is, in reality, in real life, you see hundreds and hundreds of companies. They continue investing in several projects in India, abroad, in the States and all. Then before they commit huge investments running into thousands and thousands of crores, they evaluate those proposals thoroughly. In the evaluation process, they apply some method that we have discussed. Which one maximum companies apply, which methods are popular in the industry, try to search this data on the net and try to make a summary of that Okay, which method is popular and which method is often used by which company or which known companies. Try to assess this. I can explain to you, but it is better if you get the recent update to what is happening in the industry. Now this part, IRR and NPV contradiction issues, I had explained to you. Project appraisal in MS Excel. This part we will take up once the last method of project appraisal is discussed with you. After discussion only, we will take this project appraisal through MS Excel. Now, last method of discussion is profitability index method. Profitability index method. Look at the word itself, index. What index are we making? We are making profitability index. It is also known as capital rationing. Also known as capital rationing. It will be much better if we explain it using the term capital rationing. You all know the meaning of word ration. Ration कब use होता है? Under which condition do you use rationing? राशन का मतलब तो मालूम है ना आप सब लोगों को? क्या मतलब है राशन का? BPL, below poverty line, no.
Sir, supplies.
Supply. और राशनिंग की जरूरत क्यों महसूस होती? Rationing in your daily life, especially the kind of family all of you come from, you may not have ever experienced the word ration in reality. The necessity or the reason of rationing or need for rationing arises when the resources are limited. Somebody wrote below poverty line, means if the resources are unlimited, anybody can take anything he or she wants. If the resources are limited, then what do? You distribute them in such a way that everybody gets and there is no problem in future also. Some kind of sustainability. If resources are unlimited, you do whatever you want. The same thing is applicable in capital budgeting decisions also under a method which we call as profitability index or capital rationing. What do we do when the funds are limited and we have several profitable projects? Suppose you have 10 projects. Each project is profitable, shows good IRR, good, NPV, very good, what we call average rate of return. Payback period is also very less. But you cannot. Can you accept all the 10 available projects? You cannot, because your resources are limited. The money that you have used, so you have raised from the market, is limited. Or can you raise infinite funds from any market? A company wants to finance a project, let us say costing 10 lakh. It can take money from bank for 10 lakh. If it is 10 lakh crore worth several projects, each one is attractive. Can it do that? Practically, it cannot. Therefore, it needs to ration its capital. The capital available with it is to be used using a method known as capital rationing or profitability index method. So this is the meaning of profitability index method. That is when we have limited funds and limited funds in relation to profitable projects available with us. Not merely limited funds, not merely profitable projects available, but a combination of two. Several profitable projects are available, but available funds are limited. We cannot go beyond this. Therefore, we need a method known as profitability index method or capital rationing method. How do we calculate? It's very, very simple. You have already known the calculation of net present value. You have already calculated the concept of net present value. You know how to arrive at net present value. That is, you know gross present value. You also know the investment. Can you recall? Can you recall now what is gross present value and what is investment? We discussed just 2-3 days before only. Let me take you to that slide. In this example, What is gross present value for project X? 6 lakh.
1,250.
Okay. And what is investment?
5 lakh.
5 lakh. So profitability index would be gross present value divided by cash outflow. I'll repeat, must be given also in the slide. Okay, this formula, okay, I have omitted, but I'll explain. What will be the profitability index of X? You can write down if you have got pen and paper with you. Profitability index is equal to gross present value divided by investment or outflow. Have you noted down the formula? Using your pen and paper, note down the formula that present value profitability index is equal to gross present value divided by investment. Based on this, calculate profitability index of all the projects. What will be PI for X, what will be PI for Y, and what will be PI for Z. Calculate that. One of you can tell me the answer. Yes. If gross present value is to be divided by investment for X, Y, and Z, what will be the answers for X, for Y, and for Z? Let me write here itself. Have you calculated or you are still waiting for my answer? 1.2025 for Y, it will be 1.2369. For Z, it will be 1.2672. You can calculate up to 2 decimal places or 3 or 4, any number of decimal places. So this is the profitability index which I have just written in this slide. It is equal to gross present value divided by investment. So what we do, we calculate the profitability index using the data which is already available with us. Once it is done, then the next step would be, look at the steps, meaning I have explained, calculation I have explained. Before merits and demerits, you should know what is the basis of decision making. Basis of decision making should be the project which gives you the higher index should be preferred over the one which is giving you lower index. This is what I have shown in the next slide. There are projects X, Y, Z, W. Just again assume data. Initial outflow was this much. NPV in crores was this much. So profitability index would be this much. So we have converted this data into profitability index. And once profitability index has been calculated, we can assign them rank. I have already worked it out for you. Which project has got the highest any profitability index? 1.6. If there are many, we can arrange them in descending order. Highest one will appear first, followed by the lower and the lowest. So Z has got the highest PIE profitability index. It is given as rank 1. Next higher is W, next is Y, and least is X. So in the next slide, this has been illustrated. Z has got the first rank, W second rank, Y third rank, and X fourth rank. X fourth rank. Accordingly, their respective investment outflow, which is taken from table 1, has been mentioned in front of them. Profitability index also has been mentioned. So this is how we will rank them and will decide. Before I explain to you the concept of capital rationing, this is what still capital rationing has not come into picture. Before I explain, until this stage, if you have anything, any question in the calculation part, you can ask about it. But if you are clear about the calculation, I'll move on to the next part. Are the calculations clear? Once it is over, then I'll explain to you the capital rationing concept here. See, if you wish to take all the projects, how much would you require? How much money would you require? 11.5 crores. Total all of them? 11.5 crore. Suppose you only have 10. You only have 10 crore, then what do? Suppose you have 10 only and you take project Z because it is highest PI, then go for Y, then go for W and Y, you will still be left with some money. So what do you do with that? If you want to go for X, you need more money. In such a situation, there are two options. If the projects are divisible, so we can implement part of it. If the projects are not divisible, so we may go for slightly lesser PI project so that our total money that we have raised is utilized and our wealth is maximized. Leaving money idle will lead to erosion of wealth. Therefore, we follow profitability index method in a situation where there are large number of projects and large number of projects are arranged in order of profitability index, and higher rank is assigned, or rather highest rank is assigned to a project which has got the maximum PI followed by lesser one, and so on and so forth. So this is the decision making criteria. Then you have its merits and demerits. Merits I have already explained about the profitability, about the net present value. Whatever are the merits of net present value, because the basis of calculation is the same. Same merits and demerits will be there whichever are applicable in case of net present value. The only difference is that there your decision is based on absolute figure. That is, net present value is so many lakhs or so many crore or so many thousand. Here the decision making is based on figures of index that you have calculated. That is the only difference. Otherwise, the basis is same. So whatever are the merits and demerits are the same, which are applicable to net present value. Then divisible and indivisible project, the project are divisible, then naturally you can take part and utilize the entire money. If the projects are indivisible, they cannot be divided or part cannot be taken, then you can compromise for a project having slightly lesser profitability index so that the entire funds which you have raised can be utilized. This is what the meaning of profitability index and associated concepts were. With this, all the methods that we are supposed to discuss in capital budgeting, we have discussed their meaning, their calculation, their decision making, merits and demerits we have discussed. And with that, we are left only with one topic that I will cover, that is using Microsoft Excel in capital budgeting decisions. Before I do that, let me explain to you the summary of what we have done in unit number 3. Unit number 3 of various decisions that you have in financial management. Basically, there are 3 decisions. To which decision does this unit belong to? What are which category, or which is the major head? Have you mentioned your names in the chat box? Has everyone mentioned the name in chat box? If some of you have not still mentioned, please mention. Okay. Now we go on to, let me come to the slide once again. I was asking you, which is this decision related to capital budgeting? Can you recall what are various decisions that you take in financial management? You have financing decisions, you have investment decisions, you have dividend decisions. Which one is this?
Investment decision.
It is investment decision, correct. Now, in the investment decision, what we do, we evaluate various investment options, and based on that, we take a decision. Before we evaluate the options, we need to rearrange the data. That is, we need to work out the cash flows, not the profit. To arrive at the inflows and outflows, we need to make several adjustments with respect to outflow and also with respect to inflows. I have explained to you what are the relevant outflows. What adjustment do you make with respect to outflows? Can you recall? What adjustments do we need to make in outflows?
Rebates and concessions.
Correct, rebates. What? Very good. What do we need to do in case of inflows?
Operating expenses, depreciation and taxes.
Correct. Other than that, salvage value, working capital recovery. What is working capital recovery? I have mentioned a small abbreviation, WCR. What is working capital recovery? These are not really good sign. How many days ago I have discussed this concept? Not more than 10, 12 days ago. You were expected to revise, keep yourself fresh. When money is invested in a project, so you commit huge money for capital assets, building machinery, factory, and so on and so forth. At the same time, some money, some funds are also committed in working capital. You need to maintain some minimum bank balance. You need to give something on credit also to your debtors, and your money is light somewhere. There are parts, several things are there, which when project gets over, these are all sold off. These are all, so you recover some money from that. That is known as working capital recovery. Suppose you have bought a machine, now you have used it finally for 10, 15 years. So naturally something can be sold even as a salvage value. So we are writing it as salvage value. The place which it was occupying can be reused for something else. That becomes your, you no more require funds in the bank because that a particular project has been abandoned. Its life is over. So money will be taken out of the bank. So these are all examples of working capital recovery. To taxes, working capital recovery, salvage, so many things are considered, and we arrive at a figure known as net inflow. Those inflows we compare them with outflow using several methods like payback, average rate of return, etc., etc. Each method I had explained to you in detail and also illustrated. That this is the meaning, this is how we calculate, and this is how we take decision. Respective merits and demerits of all methods were also explained to you. What are the merits of payback period, demerits of this period, average rate of return, its merit, demerits, etc. NPV, merit and demerit, IRR, merit and demerit. With IRR, I explained, I provide more calculations with the help of tables. So that should be practiced. Unless you practice, you will not be able to calculate either NPV or this is, goes without saying, practice is a must. You must solve 2, 3, 4, 5 problems using each method. Only then you will be in a position to understand and interpret. Then last method I discussed was profitability index. If you have no issue until this situation we reach, fine. If not, I'll explain to you how to use MS Excel in capital budgeting decisions. If it is fine, I'll close this table, open Excel worksheet so that you know what is happening, and then I'll illustrate how should it be done. Shall I stop sharing this screen and make another one? Okay, I'll stop sharing this screen. I'll open another screen and then explain to you how do we do it using this. I'm going to open a blank worksheet in MS Excel. Just 1 second. Now, can you see MS Excel sheet on the screen?
Yes, sir.
Okay. Let us enter some data. Let us say inflows, outflows are 1 lakh. Let us assume some inflows also. Just like that, I have assumed certain inflows and certain outflows. Okay, I have assumed a certain inflows and outflows, and now we need to calculate either payback period or average rate of return or NPV or IRR, anything. Of all of them, naturally the calculation of IRR more tedious. Even the payback period can be calculated without using a calculator. What will be the payback period of this project? Roughly tell me straight away without making several calculations. How long will it take? This is where the role of practice comes in. What is the payback period of this project?
4.3.
Why 4.3?
3.3.
Yes. See, you need not to make there's not rocket science, or you don't require a calculator. See, 2 plus 3 plus 4, 9. You have recovered 90,000 rupees in 3 years. Is that fine? How many rupees do you require to recover? 10,000 rupees more. How many you are recovering in next year? 35,000. So you are recovering little over 3 times. So 3 years and maybe about 3 months. That's all. It should have taken hardly 30 seconds, provided the concept is clear. Now this cannot be done for IRR manually. Even with calculator, it cannot be done. So let me explain how do we do. I'm sure the basics of Excel are clear to you because you have attempted a paper on advanced spreadsheet modeling. When you can do advanced, it is something very, very simple. Okay, we have put an equal to sign. What are you interested in doing? You are interested in calculating IRR. The moment you type, can you see the screen now? The moment you type IRR, you see the what system is going to do. Returns the internal rate of return of a series of cash flows. What is the series of cash flows? The formula appears. Values, comma, guess. What are the values? Values are A1 to which one? A6. Do you agree? Now guess. You can guess at 0.1, any guess you can prescribe. 10%, 3%, 5%, any figure you can prescribe. I have written 10%. Bracket closed, you enter. What is IRR? 13%. Now this 13% is with no decimal. You increase the decimal. Let us say we have increased the decimal to 13.4899% or 13.5% you can see. So how long has it taken? Look at the control panel, formula bar. Do you see the, I am placing a cursor here in the formula bar. What formula do you see? Is equal to IRR A1 to to A6, that is the range, and after comma you provide a gap, you provide a guess, 0.1, 0.2, 0.10, any figure you provide, it will return IRR. Now, this much I need not tell you. You have got, let us say, several projects. You enter any data of your choice which comes, anything that you keep typing and appearing, something like that, you enter. And the moment you copy this formula here, you get IRR here, 52%. Moment you change these figures, it is not 5,54,000, it is 54,000 only. You get this percentage. If it is change the figures, your IRR will. I need not explain to you what is Excel and how it does change. Likewise, if you have 100 projects, write each project in A, B, C up to 100th column. Write one formula and copy, the answer will be available. How many columns, by the way, are there in Excel? We are at J, then K, L, M, N. We go to Z. Thereafter, what happens? A, B. How long can we go? Infinite, or there is a limit?
1500.
You are close to the correct answer. Not exactly 1500. Not exactly 1500, but you are close to the answer. Similarly, there are rows 1, 2, 3, 4, 5. How many rows maximum can we go? Up to चलिए ठीक है, कोई बात नहीं. Look here, I have explained to you how to calculate IRR, which seemed to be a bit difficult compared to others. Now what you all supposed to do that you arrange the data which you have in previous tables. Take any XYZ projects I have illustrated. XYZ projects I have illustrated. So you take a data of your choice, not that XYZ project. Take any 5 project, assume data of your choice. Calculate all these things, NPV, IRR, or what you call payback, ARR, using Microsoft Excel, and save it with you. Save this sheet of a data of your choice. This is what data I assume. You assume any data of your choice, assume as complicated figures as you want, because the system does not feel any text for that. You write 10, or you write 10 crore, or you write 39,569 rupees 35 paise multiplied by the same figure. System will take same time as it will take multiplying 10 by the other figure. So take any data, anything of your choice, and see how are these calculated using Excel functions. These are functions. These are the functions which are included in the financial function. Excel offers you excellent help for financial function, for statistical function, for mathematical function, any function that you can think of. The assistance is available in Excel. If you want to calculate the standard deviation of a series of data, Excel will help you. If you want to calculate binomial normal distribution, Excel will tell you. If you want, arrange the data and type. If you want simple average, mathematical average, moving average, time series, anything that may come to your mind, functions are available. All that you need to do is to explore. It's exactly like a library. Books are available, provided you go there, pick up a book from the shelf, sit down and read. Similarly, Excel is available in the computer of all of you, laptop that you are carrying, or even your mobiles, but at least you need to open the software and make certain calculations. That technology we are yet to reach, when it will automatically reach the students. We naturally as teachers will oppose, because our job will be at stake. But I doubt that technology will be available. Whether you want to learn or you do not want, system will teach you. This much will perhaps never going to happen in the foreseeable future. So you need to go to the library, go to the shelf, take out the book and read. Similarly, if you want to use Excel, at least open Microsoft Excel, blank worksheet, enter data. The moment you type the kind of function you are looking at, system suggests you everything. Look at here. Formula bar, everything appears. You need to specify the range and that's it. It is 13% with this data. If you change this outflow from 1 lakh to 1,50,000, 1 lakh to 1,50,000, this 13% will increase or decrease? What will happen? Am I not audible to you? Am I audible or not?
Yes, sir, you are. Can you repeat, sir? What have you said?
Okay, the question was, in case this outflow is changed from 1 lakh to 1,50,000, IRR will increase or decrease?
Decrease, sir.
Decrease.
Decrease. Let us make it to a small change. You remember what was the answer? 13.4899. Make it 1 lakh 1 rupee only. Remember the figure and see what happens. Oh, why is it happening? Because I did not write minus. 1 lakh 1 rupee. From 13.4898, it has been reduced to 4.4895. 0.0003% has been decreased. But there is a decrease. If you make this 20,000 as 20,001, it will increase. That means whatever system can do is enormous. Manually, it will be very, very difficult, rather impossible to have this kind of if and what analysis. So I have illustrated how Excel can help taking or analyzing the financial data, not decisions. Analyzing the financial data. Make the other calculations on your own. We will meet on Monday on 4th unit. You can exit the class because another class should be lined up. Those of you who have not written your names, write your names. If not, then you can leave the meeting.
Thank you, sir.
Thank you. Thank you.